Hey guys, hope you guys had a good day trading today. So we got a pretty nice little morning push. We kind of repeated the same old pattern. We push all morning, about 12:30, 1 o'clock comes, and we end up giving it all back. So this one wasn't as a big of a sell-off, but definitely mild. So tomorrow is quarterly option expiration day. This is when the JPM collar will roll. So again, for those of you that are not familiar with the JPM collar, what it is in short is it's basically a protective hedge that JPM puts on every single quarter. Basically, they sell calls, they buy puts, and then they sell puts way, way down. To be completely honest, I've never really found an answer of why they even do it. Honestly, prior to 2022, nobody even talked about it and nobody even cared about it. The only reason it really came into factor in 2022 was because a lot of times their puts were ending up the bought puts, which right now is 42.15. So about $85 from that right now. But the only reason that came into play was because we were seeing the puts close in the money, and then we were having massive moves on quarterly option day. Also, JPM was moving their collar lower and lower, and in doing so, that was basically pushing the market down with it. So looking at the last two collar rolls, and then these are two we closed near the sold calls, actually over them. We opened green. Now, all the other ones from late 2021 and 2022, where we closed, or we were opening rather, near the puts, we actually had some pretty red bearish days. So I am looking for a fairly bearish day tomorrow. We will see what the market gives us, but I am looking for a bear day tomorrow. So coming down today, after we put our demand in yesterday and bounced off the 200 EMA, we came up. We moved up just enough to take out our demand right there. We did not technically hit our 430.26 demand though, but this was my target area that I was looking for. From here, if we were to break through 432.23, which is also a supply level, we really are still in, even going back to July 12th, in an overall bear channel here. So I don't want you guys thinking that just because we break out of this short-term bear channel right here that we are all of a sudden bullish. Now, again, you see what here, we came down, we found bottom, we bounced, and then we dropped. So we could easily come up into this area in the 435 to 445 area and still be bearish over longer term. So do keep that in mind as we go forward. I would not be surprised early next week to see the 100 EMA retested. But also this 200 EMA, like I've said before, is going to be a big fight. So again, this 425.8 area is going to be a major support to watch. On the futures here, we did not come up high enough to target my 43.62 target that I had. So right now, 43.62 and 43.82, this is our major resistance to watch right here. Same thing though, tomorrow we can break through about 43.74 and break this bear channel. But as you can see here, we're still all the way back here in an overall bear channel. So again, I would not get too bullish. I realistically would not be too bullish until we're somewhere up in this 44.57 area and back over all of the EMAs and holding. I would not be bullish until then. Going over to the Qs. So the Qs here actually hit targets perfect. We took out my 357.8 demand. We did target and touch 359.64 supply and the 8 EMA and then rejected. Remember, we are in extreme bear momentum, and being extreme bear momentum, most of the time the 8 EMA is going to be resistance. So from here, bouncing off the 100 EMA, we are going to look and see if we can reject and come lower, or if we're going to actually make a move for the 20 EMA. Same thing right here on the Qs. Tomorrow, our resistance is about 359.2. That breaks our short-term bear channel. However, again, going all the way back to June at this point for Qs, we are still in a bear channel really until we get up in the 370s. So again, I would not be surprised over time to see a move up here. As you see, this is basically a wave. But again, we are in extreme bear momentum, and that oftentimes can lead to a big rejection off the 8 EMA. Looking at the VIX here, we did get that new supply yesterday right here on the VIX. And then we came down, we took out 17.91 and took out 17.33. From this standpoint here, 16.88 and our daily 8 EMA are support. If we see the VIX tomorrow close under this, especially the 20 EMA, then I am going to look for that bigger relief rally back to at least the 100 EMA on SPY and futures and potentially up to the 20 EMA. If we get that breakdown and closure. Now, again, if the VIX was to bounce off this 8 EMA tomorrow, which very well could happen, you see how this works back here. We come down, back test it, we get a bounce. Then I would be looking for further downside, and I would be looking for that breakdown under the 200 EMA. I don't think that comes tomorrow, but I do think there's a high probability that into next week and definitely into the end of the year, I still am bearish. And I'm still looking at weakness into the end of the year. Really, I don't think I'm going to change my stance on that until we probably take back all the EMAs and hold over that for, I would say, minimally a couple days to really sell the bullishness. So, all right, guys, I hope you guys had a good day trading today, and we'll touch base tomorrow after the JPM collar.